Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. So as we can see here, we have started to consolidate a bit at somewhat lower levels relative to the prior highs, which were posted. This would be July 11th, 2024. I have spoken about this July 11th trading period several times. I do find it to be sort of an inflection point for the market as a whole. We did start to see a lot of selling pressure within the tech space during this specific trading session. For the most part, following this trading day, this negative trading day, Tesla was sold off, but not to a significant extent. For the most part, we did see a bit of a sideways consolidation. There was a bit of a constriction here, though, as we can see, you're sort of forming a symmetrical triangle at these upper levels. But then recent fundamental events here really did lead to a sharp reversal, and we completely fell through this symmetrical triangle pattern. As you can see, I'll try to zoom in here a bit. But this price gap here was quite sizable and quite surprising because we completely gapped through some fairly important support levels in the process. Not only did we break this symmetrical pattern to the downside, but we also fell through historical support zones at 233.08. And this is a significant move here because if we do start to move back into this territory, you would have to start to expect this price gap to be filled. The reason for this is that if you simply skip over large portions of the price chart like this, what you're really doing in practice is you're overlooking or ignoring many orders that are probably still in place. Some of those orders might have closed, but many of them do not close, and this does suggest that there's a lot of space here that would ultimately need to be filled. However, as we can see here, we're entering into a bit of a consolidation period at these lower levels. This is a bit of a sideways trading move here, where the range to the top side is really being defined by roughly 225.90. And then to the downside, we're coming in just below 215. So there's a fairly tight trading range that's occurring at these lower levels. And it does currently appear that the market is looking for a bit of direction, probably looking to the market as a whole for a bit of direction to determine whether or not these current price levels are suitable for new buy positions. So currently, as we can see here, the stock is trading just above its exponential moving average, this purple line here, which is the 100 period EMA. Below this, if we were to start to see further declines here, so for example, if we did see perhaps some additional sell-off activity in the mega cap stocks and in the stock indices and things like that, we would start to target some lower levels. In particular, the level that I would be watching currently comes in at the 50% retracement of this dominant price move, which comes in just above 205. The real reason that I would be pointing to that area is because it's starting to coincide very closely with this 200 period exponential moving average. That would be this rising blue line here. And there is some reason to believe that this could occur because, if we're looking at the overall trading volumes here, we are seeing these red bars down here, which does suggest that selling activity is still outweighing buying activity. We've seen a little bit of an upside movement here in these later bars, but for the most part, the dominant movements here do appear to be in the bearish direction. And then, in addition to that, we have to be mindful of this indicator reading here in the relative strength index. Currently, we can see that there was a longer term trend movement in the RSI, which suggested that there was a fairly strong level of bullish momentum present in the stock and underlying the stock price. As this occurred, we did see this monstrous rally here above the 270 mark. So this was largely being confirmed by the indicator reading. But the negative point here is that this trend has now broken. So this does suggest that this current trend movement has run its course, and we have to start to look at possible retracement levels in order to determine, whether or not this entire move is going to wind up being retraced. So, currently we have moved through the 38.2% Fibonacci retracement, but I would say that part of that was due to the fact that we had this major price gap. If that gap wasn't so sizable, it would have been more possible at least to have found support in that area. But we really gapped right through there, so that sort of made it impossible for share prices to find support at that area. We just opened the next day. We were already trading below that level. So, currently I would continue to watch this 50% retracement level to the downside at 205. I would definitely say that you could start to build positions in that area if you were looking to buy the stock. But there is a lot of uncertainty in the market at the moment because it really does seem to depend on, how these other stocks are going to start performing. How is Nvidia going to perform? How is Microsoft going to perform? How is Apple going to perform? All of these stocks have seen substantial moves lower in recent trading sessions, and there's been a lot of chart destruction that has occurred during these processes. So, that's just the reality that has to be dealt with. We really can't ignore the fact that the broader market is selling off quite sharply. So, finally to the downside, we can just kind of zoom in here. The first level to watch does come in at this roughly 215 mark. We are starting to see the 100 period exponential moving average come into this area. And then from here to the downside, we would be looking at a possible target about $10 lower, given the fact that this is where the 50% Fibonacci retracement rests. And it's also based on the fact that, this 200 period exponential moving average is also starting to rise into this area. So there is a combination of events, a confluence of technical factors that are pointing to these price zones specifically. So here's the current market analysis for Tesla Incorporated, stock ticker TSLA.